Welcome everybody, and in this lecture we'll discuss about alternate minimum tax. Now you would have heard about minimum alternate tax and now you are hearing alternate minimum tax. ये क्या है सर? MAT सही है या AMT सही है? Lot of confusion. I will give you full clarity. In the year 1996, olden times I am talking about, what happened that there was a very big company in India which was to conduct annual general meetings and say our company has earned great profits and we are distributing huge dividend to all the shareholders, and shareholders were very happy, clapping, celebrations, future growth plans, everything was great. The same company comes to income tax department and says, no, this time we did not earn any income, so we cannot pay any tax. Now are you able to understand? Same company in shareholders meeting, huge profits, huge dividend. When it comes to income tax department, no profit, no tax. Why so? How can it do so? So the company's name was Reliance, and all this was to happen for so many years with efficient tax planning. They did not do any tax evasion, right? They did not hide any income. They did not hide any assets to the income tax department. But they used the tax provisions in such a way that the taxable incomes become zero. Now the government was worried about it a lot. Government was thinking, if companies start doing like this, then it would be very difficult for government to survive, right? Because government want taxes. So then at that time, one finance minister was there. He even became a chartered accountant. He is a chartered accountant. Thought and came out with a concept called as minimum alternate tax. Now this minimum alternate tax is the minimum tax which the company should pay, irrespective of whatever tax planning they do. And this is how the government started collecting taxes from Reliance. Wonderful, right? And after few years, government thought, why only apply minimum alternate tax to companies? We will also apply the concept to other assessees. But for other assessees, the name was changed and the name is alternate minimum tax. Now MAT for companies, AMT for other assessees is as simple as that, you should remember. Now one thing I'll tell you, MAT will study at the final level. Minimum alternate tax is tough and will study at the final level only, not in your intermediate syllabus. But AMT is in our intermediate syllabus too, and it is easy for us to learn. And if it comes in exams, 6 marks, cake walk for you. And there are high chances. The chapter which we are studying now, it has assessment of individual, assessment of HUF, assessment of cooperative societies, alternate tax regime, assessment of AOPBI, individual tax computation, AMT. These are the so many topics which we will discuss in this chapter. But one thing I'll tell, from exam perspective, the most important chapter. Okay, so we'll try to understand what is AMT. So I simply said to you, AMT is alternate minimum tax, applicable to whom? All assessees. Okay, all assessees other than company. Why they said other than company? Because for company there is MAT. That's why other than company they used the word. So AMT is applicable to all assessees. That means AMT is applicable to individual, HUF, partnership firm, LLP, local authority, association of persons, body of individual, artificial juridical person. To everybody AMT is applicable, but not companies. Clear to all of you? Very good. Now I forgot to tell you that AMT is covered under the section 115 JC. Which section? 115 JC. Okay, let's continue with the discussion. So AMT 115 JC applicable to all assessees other than company. Then second important condition is the assessee should claim deduction under section 80H to 80 RRB. Now as of now in today's world 80H section doesn't apply, not there, but 80 IA, IB, right, IC, all that are there, right? So 80H to 80 RRB, are you claiming the deduction under these sections? Hey, 80P is to be ignored. 80P is for cooperative societies, so that deduction you can claim, no problem at all. But what the income tax department says, that are you claiming deduction under 80H to 80 RRB? Then AMT is applicable. But if it is only 80P, then no, AMT is not applicable. Okay, next thing. Are you claiming deduction under 35 AD? Are you claiming exemption under 10 AA? If the answer is yes to any of the three sections, like 80H to 80 RRB or 35 AD or 10 AA, if yes to any of the three benefits, then AMT is applicable. All is not compulsory, any of the three is compulsory, right? For individual HUF, AOP, BY, AJP, they said that there is some concept called as adjusted total income. I'll teach you in next 5 minutes, okay? But adjusted total income concept is there. Now if adjusted total income does not exceed 20 lakhs, means adjusted total income is up to 20 lakhs. Suppose it is 10 lakhs, 15 lakhs, 20 lakhs, 19 lakhs, 99,999. No, 20 lakhs also. If adjusted total income is 19 lakhs, 99,999 or even 20 lakhs, AMT provisions doesn't apply. But if it is 20 lakhs 1 rupee, then AMT provisions will apply to individual HUF, AOP, BY, AJP, local authority. Okay. So this 20 lakhs limit is there. More than that, then only AMT applies for all these assessees. But did I use the word partnership firm? Did I use the word LLP? No, right? For LLP and partnership, AMT is applicable irrespective of their adjusted total income. If their partnership firm LLP adjusted total income is 1 lakh, still AMT will apply. Okay? This you should keep in mind. Now, I'll tell you that if you are opting for income tax returns, you have to file income tax returns. Now, you can file income tax returns under regular scheme or under new regime. If you are filing income tax returns under new regime of tax, that is under 115 BAC or under 115 BAD, if you are opting for 115 BAC, 115 BAD, then what? Simple, AMT doesn't apply. So, AMT will not apply if you are opting for income tax return under new regime under 115 BAC or 115 BAD. BAD talks about cooperative societies. BAC talks about individuals. Okay. Suppose you have investments in the name of alternative investment fund under section 10 subsection 4D. What I said? Under section 10 subsection 4D. Okay. if you have investments in alternative investment fund category 3, then definitely alternate minimum tax concept does not apply. So देखो, I'll simply tell you one thing. When they say conditions, all conditions are compulsory. But if you fail any condition, one condition also you fail, then AMT does not apply. Like if I say, what is the section applicable for AMT? 115 JC, very good. To whom it is applicable? All assessees other than company. Very good. Okay. You should claim deduction under which sections? 80H2 RRB other than ATP or under 35AD, or you should claim exemption under 10AA special economic zone related section. Right? 10AA you remember, special economic zone related section. 35AD you remember, specified businesses. So if you are claiming deduction or exemption under any of the three sections, right, then AMT will apply. But this is the second condition only. Third condition, you should see, if you are individual HUF, your adjusted total income, or if you are individual HUF, AOP, BOI, AJP, local authority, your adjusted total income should be more than 20 lakhs. Then only AMT will apply. Less than 20 lakhs, AMT does not apply. No deductions in can be claimed under the three, right? 80H2, 80 RRB or 10AA or under 35AD. Then also AMT will not apply. Okay. For partnership firm, no adjusted total income limit applies. Right? It is for firms and for LLPs, AMT is applicable irrespective of adjusted total income. What is adjusted total income? No worries, I'll teach you. Don't worry. Wait. Right. Next, come to the next concept. If you have opted for the new regime under 115 BAC, 115 BAD, or you are taking any alternate investment fund related deduction under section 104D, then AMT does not apply. Okay, very good. Now, how to compute AMT and how to compute your final tax? For that, 4 steps are there. Right? Very easy. You know how to compute total income, correct? So on the total income, you should compute the tax. Now when you compute the tax, exclude health and education cess. So calculate tax totally, including surcharge, everything, but not health and education cess. Right? Now tax on regular income, normal income, you calculated as per step 1. Okay. Shall we go to step 2 now? Step 2 says calculate adjusted total income. Step 2 क्या बता था? Calculate adjusted total income. How will you calculate adjusted total income? Arey simple. You take total income, add this 80H2 RRB deductions or 35AD deduction or 10AA exemption. You add any of the three if available, and then on 35AD related amount, you should deduct the depreciation. 35AD is specified business. Capital expenditure is allowed as deduction. Okay. But now you are reversing it, right? You are adding back 35AD, right? So at least the depreciation should be provided. That's why step 2 says depreciation you deduct. Now after deducting depreciation, you get adjusted total income. You get what? Adjusted total income. Okay, clear? Very good. Now come to the third step. Third step, you have to calculate AMT, alternate minimum tax. Very easy. Simple. Correct? Array, adjusted total income into 18.5% tax you will apply. That's it. You get the alternate minimum tax. Plus health and plus surcharge and all will do, obviously. Done? Now come to step 4. Step 4 says what tax you have to pay. Because now you have regular tax as per step 1. You have alternate minimum tax as per step 2. But which tax to pay? That step 4 talks about. Step 4 says take regular tax, take alternate minimum tax. Out of these two, what is higher? That you pay to the government. Government को तो ज़्यादा मांगता है, yes or no? Correct. So same way. So what they said, step 4 is simply whichever is higher you should take. And once you take the higher amount, add health and education cess at the rate 4%. This way you compute the complete tax including alternate minimum tax. Here I'll explain to you again. Step 1, tax as per normal income, normal rates. Step 2, compute adjusted total income by adding to the total income, actual total income plus 80H280 RRB deduction, 35AD deduction plus 10AA exemption minus depreciation on 35AD related part. You get adjusted total income. Step 3 says into adjusted total income into 18.5%, you get alternate minimum tax. And step 4 says alternate minimum tax as per step 3 or regular tax as per step 1, whichever is higher you will pay tax. To that add health and education cess. Only here health and education cess is added. In step 4, nowhere else. Okay, we'll get alternate minimum, final tax liability. Okay, now come to certain notes which we have to see in the second page. That says, first page done, right? Second page. So what I am talking about, simply if your AMT tax is more, suppose your AMT tax is more than your regular tax, then what will you do? कुछ तो करना पड़ेगा ना. So if AMT tax is more than your regular tax, then your adjusted total income is deemed to be the income. What I said, your adjusted total income is deemed to be your income. If your AMT tax is more than the regular tax, or I simply tell you step 3 tax is more than step 1 tax, in that case your step 2 income, that is adjusted total income, will be treated as deemed income. Clear? Now what are the rates applicable? Simply normal rates are 18.5%. AMT is 18.5%. But if the assessee is a cooperative society, then the tax rate will not be 18.5 for cooperative society. Only for cooperative society 15%. Okay, and if the assessee is located in IFSC, International Financial Services Center in Gujarat, okay, then 9%. Because whole transactions happen in foreign exchange, it is a great opportunity for the government to accumulate more and more foreign currency. And that's why government says, okay, come, we'll reduce the tax for you. Because you are giving foreign exchange. We as India are becoming internationally strong. And that's why less tax. Okay. So if you want to do such thing, make India internationally strong, do certain business in relation to export, then definitely government will give lot of benefits to you. In relation to tax, in relation to GST, in relation to funds, in relation to loans, everything. Okay. So what I said till now, if suppose your step 3 AMT tax is more than step 1 regular tax, in that case your step 2 adjusted total income is treated as total income. Normally 18.5 is the rate of AMT, but for cooperative society 15% and assessees in IFSC 9% only. Very less, correct? Now, if this tax rate is not enough, you have to submit a form number 29C. Yes, who should submit? A chartered accountant should submit. Which form? 29C. When he should submit? At least 1 month before filing income tax return. Suppose you are an individual not covered under audit and your tax returns are to be filed till 31st July, then 29C form should be submitted by CA on your behalf till 30th June. That means at least 1 month before the due date of filing returns. Suppose your due date of filing income tax returns is 31st October because you are an audit assessee. You are subject to audit. Then at least till September 30th, 1 month before, right? October 31st, September 30th. So October 31st is the due date of filing returns, but for Form 29C, 30th September. Before that you file, or on that day you file, no problem. This you should be able to remember. Are you clear with what I said? 29C by chartered accountant. At least 1 month before filing the income tax return. Now, you understood all these things what I tried to convey, right? The provisions like interest is there, penalty is there, right? All other provisions of income tax are there, na? That will apply as it is. Only whatever part I discussed, that is specially added now. But all other things are same, na? Nothing changed, correct? So all other provisions will apply as it is. That you should keep in mind. Now, there is something called as tax credit. In simple language, AMT credit. Now, what is this credit? How will we get the credit? By what time we can utilize the credit? How much can be utilized? All questions I am going to answer. Just listen for few minutes. First thing, if suppose your AMT tax is there, this is AMT tax, is more than your regular tax. Now regular tax low, AMT tax high. Yeah, correct. So AMT tax high, regular tax low. The difference between AMT tax and regular tax, right? Suppose AMT tax is 10,000 and regular tax is 3,000. The difference is there, na? You have to remember the difference is 10,000 AMT tax, regular tax 3,000. That 7,000 is the AMT credit. 7,000 is the AMT credit. Now, why this credit came into picture? You are taxpayers. You will cry with income tax department, na? My regular tax is 3,000 only. Government is forcing me to pay 10,000. I'm disappointed, right? So you will cry. Government said no problem, don't cry. We'll give you credit. So when AMT tax is more, regular tax is less, then you get AMT credit. So how will you calculate? AMT tax minus regular tax. If the answer is positive, you will get AMT credit. Okay. So from when we can utilize this credit? Will we get any interest on it? Sorry, no interest on AMT credit. So income tax department will not give any credit to you. Sorry, not give any interest on AMT credit. Clear? Very good. Come to the next point. Focus, understand. Now, AMT credit is more. Your credit is available. How much time you can utilize the credit? Till 15 assessment years. So 15 assessment years are huge enough, right? So till 15 assessment years, you have the option to utilize your AMT credit. Sir, 15 years over, after that still credit is left, what to do? The credit expires. So credit can be used only within 15 years. Okay. So can we use next year itself? You can use next year itself. But the problem is the AMT credit can be used when your regular tax is more, AMT tax is less. So regular tax is more, AMT tax is less, then you can utilize the credit available. How to do? Suppose your regular tax is 25,000. AMT tax is suppose 15,000. So in that case, this 10,000, you can utilize AMT credit. So how much is your credit available? You have to check. And you can reduce from your regular tax, you deduct this credit and pay tax on lesser income. Okay. Suppose example, your regular tax is 25,000. AMT tax is 15,000 and credit is suppose 4,000 available. Then simple as that, 25,000 regular tax minus 4,000 credit. So 21,000 is the tax which you should pay. Simple, no problem. But suppose your AMT credit is 15,000. That means your regular tax is 25, correct? And your AMT tax is 15,000 and your existing credit is suppose 15,000. Both are 15. Now from 25 regular tax, if you deduct 15, what will happen? You have to pay only 10,000 tax. Very happy, right? But income tax department said no, aisa kaisa hota. We should get minimum money with us, right? So after deducting the credit, what I said, your credit is deducted, right? After deducting credit, your tax liability cannot be less than AMT. So your regular tax is this much, okay, this much high, and credit is also high, but after deducting your regular tax, it cannot be less than the AMT. So you should deduct that much credit which will bring your regular tax to AMT. Government gets at least minimum tax. That's what the purpose is. Easy or difficult? Very easy, right? So please remember, regular tax minus AMT credit can be either equal to or greater than AMT tax. Okay? This you should remember. Mathematically I said. Clear? Very good. Now I was telling you that suppose if there is a foreign credit under section 90, 91, 92, some foreign credits are there. You will study this in CMA final. There is a double taxation avoidance agreement chapter. In that chapter, this 90 section, 92 section related benefits you will study. Anyhow, forget about all that and simply remember, if any credit of foreign tax is there under section 90 to 92, simple, your foreign tax credit which is more than the AMT credit should be ignored. Which is more than the AMT credit should be ignored. So you will take AMT tax minus foreign tax credit. Like that you will calculate. Now your regular tax, from that you have to deduct the AMT credit, right? And after deducting AMT credit, your tax should not be less than AMT, right? Less than AMT, right? And the difference is there, na, which we discussed till now. If foreign tax is more than the difference, then please remember that excess foreign tax is ignored. Okay? And if government does any change or court order gives any change to the regular tax or to the AMT tax, then that increase should also be adjusted, and by the court order if there is a decrease in tax, that also should be adjusted. This way you should understand the topic. Foreign tax credit, if you don't understand, you can skip, because from exam perspective not important. Okay, that can be asked only in final. Some small examples are there and some numericals are there. We'll do that. Okay, chalo. Now see this, that we have certain examples on credit to understand, just to make you understand. I also gave oral examples, but written will always help you, right? So I added the examples here itself. Same from CMA textbook only. Okay, tax liability under 115 JC. So AMT tax is how much? 500. Now your regular tax is 1000 rupees. Now tell me, when will AMT be attracted? If your AMT tax is more than regular tax. Tell me, here is AMT tax more? No, not at all. So AMT tax is 500, regular tax is 1000. So AMT tax is not more. That's why AMT provisions will not apply. Okay. Now difference is 500. That's okay. What will we do with it? That's why I did not discuss. Now come to B point. They spoke about year 1, and when they are telling about year 1, then year 2 will have also an impact on it. So keep in mind. So liability under 115 JC is your 2000, and under regular tax is 1000. Now here AMT tax 2000 is more than regular tax 1000. So we should compare the difference, that is 1000 rupees, and this is AMT credit. You can consider it as AMT credit. Okay, and you can carry forward for how many years? Up to 15 assessment years. And when you can use it? When regular tax is more than AMT tax. Okay, but can we deduct uh, AMT credit so much that your regular tax goes below AMT tax? Not at all, right? Regular tax should be either more or equal to AMT, but not less than AMT. Come to year 2. Your liability is given, AMT liability is given 2500. Regular tax is 5000. Now regular tax is more, correct? Regular tax 5000 is more, and more than how much? More than AMT tax of 2500. So now difference is 2500. Okay, this difference is there. Now from this 5000, how much credit is available from last year's? देखो, you have to pay tax of AMT, that is 2500, or regular tax, that is 5000, whichever is higher. So obviously you should pay 5000 tax. But you can deduct the AMT credit available, correct? How much is the credit available? In year 1, 1000 was the credit. So from 5000 you can reduce 1000, and you have to pay tax on the balance. Okay, so tax payable. Here we did not add surcharge or cess. Anyhow, surcharge is not applicable, but cess 4% is applicable. So 4000 का 4% करोगे 160 आएगा. That you have to add and pay. That's it. Suppose we had only 1000 credit, so it was very easy. But suppose if your credit is 3500, now listen carefully. 5000 is your regular tax. If you deduct 3500, then 1500 will be left. How much? 1500 will be left to pay the tax. But the point is, can we bring the tax below the AMT limit? Whatever is the AMT tax, can we decrease it? No, right? Your AMT tax is how much? How much? Am I going missing on something? I feel so. Okay. Now, your AMT tax is 2500. Correct. Now, your regular tax is 5000. Credit is 3500. So, from 5000, if you deduct the credit, it should not be less than your AMT tax, that is 2500. So, anyhow, output we want 2500. Input is presently 5000. So when you see the difference, it will be 2500 only. So out of the total credit, we will only use 2500. Sir, total credit is 3500, sir. Absolutely yes, no doubt about it. But we used only 2500. Yes. So the extra 1000 is there, na, that you can utilize in the next year. Okay. So that extra can be used in the next year. That next year 1000 can be used. This way AMT credit related problems you have to solve. But is AMT applicable? Should we check when it is applicable and when it is not? For that we'll solve one more problem. Okay, ready. Now see this question. They gave compute tax of the following assessees. Now in the question they gave particulars. Then they gave that there are multiple assessees. Like Mr. W is there, Mr. X is there, right? Then Mr. Y is there, X LLP is there, A LLP, B LLP. So 5 assessees are there. They gave all informations and they want us to solve the problem. What I feel, can we do one assessee at a time and solve the problem? That will actually make you easy to understand. Okay. Gross total income being business income. 15 lakhs is your gross total income. How much? 15 lakhs rupees. Then deductions under section 80C is given. How much? 1 lakh. Then deductions under 80G is given. How much? 25,000. Then they gave deductions under 80H. Oh, yes. 80H. Correct. So 1 lakh 75, sorry, 7 lakh 75,000. Now I'll tell you one thing. That first thing, the assessee is individual. Okay. Second thing, 80H section is there. Deduction you claimed. Okay. So you are not even opting for 115 BAC, not even getting any benefit under 10(4)D. So AMT provisions may apply. But because it is individual, 20 lakhs rule is also there. That also we should check. Okay. Very good. Now deductions under G, 80H they give. So we have totally 15 lakhs gross total income. From that if you deduct these three items, 1 lakh 25,000 and 7 lakh 75, you simply reach to total income of 6 lakhs. It is given in the question itself. Now because he is individual, his regular tax can be computed up to 2 lakh 50 nil, 2 lakh 50 to 5 lakhs, 5% is the rate of tax, so 12,500, and 5 lakhs to 6 lakhs, difference is 1 lakh, 20% is the rate. So 20,000 plus 12,500, 32,500. This becomes your regular tax. Now, so as per step 1, we should compute regular tax. So did we do? Yes, we did. Did we add any health and education cess here? No, because step 4 we will add. Okay, very good. Now, step 2 is adjusted total income. Adjusted total income is very easy. Total income plus deductions under 10AA plus deductions under 35AD plus deduction under H2R 80 H2 80 RRP. So your total income of 6 lakhs and the only one item in the whole group is 80H, that is 7 lakh 75,000. So 6 lakhs plus 7 lakh 75, 13 lakh 75,000. Okay, till this point we understood. Adjusted total income is 13 lakh 75,000. Now if I ask you a question, tell me, is for individual, what is the criteria? Up to 20 lakhs income, no such provisions apply. Correct? Up to 20 lakhs. But here the income is only 1 lakh 75. Sorry, 13 lakh 75. So will AMT provisions apply? Not applicable. So same thing we have to write. Whether section, sorry, is section 115 JC applicable? is section 115 BC JC applicable? No. There are two criteria, same thing we'll write. First one, as adjusted total income does not exceed rupees 20 lakhs, as adjusted total income does not exceed rupees 20 lakhs. Done? Very good. Now, let's write down further point. As no deduction is claimed under section 80H to 80 RRB, as no deduction is claimed under section 80H to 80 RRB other than section 80P. Other than section 80P, bracket close, or under section 10AA. So now you see that because it is less than 20 lakhs, so AMT provision doesn't apply. That's it. So first condition failed. So that's why nil will write. We'll write how much? Nil. Now AMT is not applicable means what? Your regular tax plus health and education says nothing more than that. Okay? Write down. Alternate minimum tax under section 115 JC, under section 115 JC, 18.5% of adjusted total income. 18.5% of adjusted total income. So now your adjusted total income is 6 lakhs. Correct? No. Wait. I'll tell you. Adjusted total income is not 6 lakhs. It is 13 lakh 75,000. So you should do 18.75%. Is it right? The answer is absolutely no. Because when AMT provisions doesn't apply, how can you calculate that 18.5%? Nothing. So not applicable, we should write. Not applicable means if you write NA also, it's enough. Now we calculated step 3 also. Right? First step regular tax we did. Then adjusted total income we did. AMT tax step 3 we did. Now step 4 says the tax which we have to pay to government is higher of, correct, higher of AMT as per step 3 or regular tax as per step 1. So write down tax higher of regular tax and AMT. Higher of regular tax and AMT. Now there is no AMT. So whatever regular tax is there, that only we should write 32,500. If AMT is there, we would have compared 32,500. Write down add health and education cess. Health and education cess we should add. 32,500 into 4% if you do, what will you get? 1,300 is the amount of health and education cess you get. 1,300. So 32,500 tax plus surcharge plus 1,300 health and education cess together will reach to 33,800. This is tax and cess liability. This is tax and cess liability. Okay. Because we did one, now it will become very easy for us. We wrote everything, correct? Now only numbers have to be filled. Come to the case 2. Case 2, here also it is Mr. X, individual only. Now, what is your gross total income? 25 lakhs. ATC deduction 1 lakh. Then they said ATG deduction is also given how much? 1 lakh. But ATH, nothing. If you don't have 35 AD, if you don't have 80H to 80 RRB, if you don't have 10 AA, then will alternate minimum tax rules apply? Does not apply, right? Okay. So from 25 lakhs gross total income, if you deduct 2 lakhs rupees, 23 lakhs will come, right? From this 23 lakhs, you should calculate regular tax up to the 2 lakh 50 nil, 2 lakh 50 to 5 lakhs 12,500, 5 lakhs to 10 lakhs 20%, 10 lakhs to 23 lakhs 30%, right? That calculations you should properly do, and when you do, you will get how much? 5 lakhs 2,500. How much you will get? 5 lakhs 2,500. Right? Now, adjusted total income. Do we really need to even compute? Not applicable, right? So we don't require. But anyhow, we'll write the same 23 lakhs because nothing to add special to the total income. Nothing to add like 80H to 80 RRB. Nothing as such. So directly total income plus 0 is equal to 23 lakhs. Total income 23 lakhs plus 0 is equal to 23 lakhs. Khatam. Come to the next thing. Now AMT provisions is not applying. Is it because it did not exceed 20 lakhs? No. It is because 80H to RRB single section is also not there. So that's why what we'll write in the second point, Mr. X point, no. No. Now your income is very easy to calculate. Correct? You know how the income is. 23 lakhs is your total income. Tax how much? 5 lakh 2,500. There is no challenge to this tax, so directly we'll take it in tax liability plus surcharge. 5 lakhs 2,500. Five lakhs 2,500. Now we have to simply add health and education cess. So how much? 5 lakhs 2,500 into 4%. 20,100. 20,100. Very good. Now 5 lakh 2,500 plus 20,100 you do, you will get 5 lakhs 22,600. 5 lakhs 2,500 plus 20,100, 5 lakhs 22,600. This is how you should actually compute your final tax liability. Now come to Y. Y also they gave gross total income to be 27 lakhs. Then ATC 1 lakh. 80G nil, but 80H is very important. It is there, 8 lakhs. So what is your total income? 27 lakhs minus 8 lakhs minus 1 lakh. So totally 27 minus 9, 18 lakhs will come. So 18 lakhs is your total income. When you calculate tax on 18 lakhs, up to 2 lakh 50 nil, 2 lakh 50 to 5 lakhs 5%, 5 lakhs to 10 lakhs 20%, 10 lakhs above till 18 lakhs it is 30%. You will get 3 lakhs 52,500 as tax. This is regular tax as per step 1. Now step 2, adjusted total income. 18 lakhs your total income plus 8 lakhs your 80H. It becomes 26 lakhs. Step 2 done. Step 3, should we compare? Not required. Correct? Oh, sorry. Should we compare? I'll ask you a question. Tell me. He is individual and his adjusted total income as per step 2 is more than 20 lakhs. 26 lakhs it is. Do they have any deductions under 80H2 RRB or 35AD or 10AA? Yes, it is there. 8 lakhs is there. So all conditions satisfied, right? So that's why benefit should be given. So write down yes. Now the question arises, your regular tax is 2,50,000 to 500. Okay, adjusted total income 26 lakhs. Now when you multiply this 26 lakhs into 18.5% the AMT tax, you will get 4 lakhs 81,000. Write down 4 lakhs 81,000. Now we have to compute or compare 4 lakhs 81,000 with 3 lakhs 52,500. Right? So regular tax is less, AMT tax is more. So we'll take AMT tax as the final tax liability. 4 lakhs 81,000. 4 lakhs 81,000. Now we have to add, okay, health and education cess. 4 lakhs 81,000 plus 4% health and education cess. When you do, 4 lakh 81,000 into 4%, 19,240. Right? Very good. Now 4 lakh 81,000 plus 19,240 when you do, you come to 5 lakhs 240 rupees. 5 lakhs 240 rupees. Now come to the next question. Wait a second. Now in the third case, if you see Mr. Y's case, I am just telling you, Y's case, he is an individual and he has 80H deduction, correct? And please remember, his tax liability under AMT is more than your regular tax, and that's why AMT provisions are applicable. That's done. Now we calculated everything and you know how to do. 4,81,000 AMT tax is the final tax. Health and education says 19,240 added, and we got the tax payable to be 5 lakhs 240 rupees. Now one small thing I'll tell. What is your income? If I ask a question, what is the income? Is your income 18 lakhs? The question I am asking. Or is your income 26 lakhs? 18 lakhs or 26 lakhs? Sir, total income is 18 lakhs, right? But the AMT provisions, whenever they are applicable, you have to remember that adjusted total income will be deemed to be your total income. So it is deemed that 26 lakhs is your total income. That is the third point which I wanted to teach you. Now come to the next case. ALLP. Hey, it is LLP. It is LLP, right? But before I come to this, again see Mr. Y's case. Again see Mr. Y's case. Your adjusted total income is 26 lakhs. That means more than 20 lakhs. And that's why AMT provisions were applicable. So all that points I just trying to reconnect to you. Now come to Mr. ALLP. Right, your gross total income is 32 lakhs for ALLP. Then you don't have 80C deduction, you have 80G deduction, you don't have 80H deduction. Now if you don't have 80H deduction, AMT provisions will not apply. Neither 35AD is there, neither 80H is there, neither 10AA is there. Then why should we apply that tax of AMT? Nothing. Conditions failed, not applicable. So 2 lakhs is your income, gross total income. From that 1 lakh is your deduction, so that 80G, and 31 lakhs becomes your total income. Now because it is a firm, 30% is the rate of tax. So 31 lakhs into 30%, 9 lakhs 30,000 will come. Okay. Now if you want to calculate adjusted total income to your total income of 31 lakhs, what will you add? Nothing. So that's why your adjusted total income is also 31 lakhs rupees. And I already said, because there is no deduction under 80H2, 80RRB or under 35AD or under 10AA, so AMT will not apply. So we'll write no in the solution. Right? In the solution we'll write no. Then we have to write what is your tax status? Not applicable. NA. AMT status not applicable. NA. Obviously when it is NA, your tax will be regular tax computed, 9 lakhs 30,000. 9 lakhs 30,000. To this 9 lakhs 30,000, we should add health and education cess. So 4% is your health and education cess. We'll add that. 37,200 will come. Health and education cess 37,200. 9 lakhs 30,000 plus 37,200 will come to 9 lakhs 67,200. 9 lakhs 67,200. This is your final tax liability. Done with. This way you have to practically think. Right? You should understand. Now, here your adjusted total income is more than 20 lakhs, correct? In ALLP, your adjusted total income is more than 20 lakhs. So AMT should have been applied. But the answer is all conditions are compulsory. 80 deductions, 35AD or 10AA, out of the 3 at least one should be there. Right? So it is not there. First point. And second thing, for LLP 20 lakhs rule doesn't apply. For LLP 20 lakhs rule doesn't apply. Okay, come on. BLLP, let's see. 8 lakhs is the gross total income. From that deductions 1 lakh under 80G, 2 lakhs under 80H. Great. So here 80H deduction is there. Okay. From 8 lakhs minus 1 lakh minus 2 lakhs, 5 lakhs will come. What is 5 lakhs? 5 lakhs is total income. 5 lakhs is total income. Okay. Now come to the next part. 5 lakhs is your total income. Now you know what is total income. You have to calculate tax on it. And because it is LLP, 30% is the rate. 5 lakhs into 30%, 1,50,000 will come. Correct? 5 lakhs into 30%, 1,50,000. Okay. So you calculated tax as per regular provision. Step 1 done. But step 2 we should do adjusted total income. So your total income 5 lakhs plus your 80H deduction 2 lakhs will get adjusted total income. 5 lakhs plus 2 lakhs, 7 lakhs is adjusted total income. Step 2 done. Now step 2 is over. Is AMT provisions applicable? Because adjusted total income is 7 lakhs less than 20 lakhs. So tell me, AMT provisions applicable or not? Not applicable. Is absolutely wrong. Because for LLP 20 lakhs rule doesn't apply. For partnership 20 lakhs rule doesn't apply. So even if it is less than 20 lakhs, adjusted total income less than 20 lakhs, still no problem at all. Okay, the provisions apply. So then which provision? 80H deduction is claimed. So that's it. AMT provisions apply. So we'll write yes. We should write yes. It's applicable. But now we have to calculate tax on 7 lakhs. Step 3 we should do, correct? Tax as per AMT. Step 3. 7 lakhs into 18.5% when I do, I'll get 1,29,500. 1,29,500. Okay? Yeah. Now I'll ask you a simple question. Tax as per AMT 1,29,500. Tax as per regular provisions is 1,50,000. Whichever is higher should be done in step 4, correct? 1,50,000 or 1,29,000. Obviously 1,50,000 is more. So we'll write 1,50,000 in your tax. Okay? Tax higher of regular tax or AMT. What is higher? 1,50,000. To that 1,50,000 we have to add health and education cess. How much? 4%. So 1,50,000 into 4%. 6,000 will come. How much? 6,000. So 1,50,000 plus 6,000 will come to 1,56,000. 1,56,000. Okay, this is your final tax liability. This is what you should pay to the income tax department. Okay, this is wonderful. With this we completed the entire provisions of AMT and hope you enjoyed the whole provisions too. Okay, in the next lecture we'll take up the new topics. Till then, take care. Bye bye everybody.